Pay attention because this just happened and it could change everything. Judge Analisa Torres has just slammed the door in Ripple's face, refusing to close the case. XRP is plummeting, dragging other cryptos down with it. But wait, because the real ticking time bomb might be somewhere else. Tether, the crypto world dollar, is now in the crosshairs of new regulations that could make it disappear from the United States and Europe. What does this mean for your portfolio? Are we on the brink of a cascade of liquidations? Stay tuned, because I am going to explain point by point what is happening and how it directly affects you. Let's get straight to the point. Ripple and his lawyers wanted to put an end to this. They asked Judge Torres to dismiss the SEC lawsuit. And what did the judge say? A resounding nitrogen monopoly. This is serious. Why? Because it prolongs the uncertainty. The big question remains unanswered. Is XRP a security or not? As long as there's no final answer, major institutional investors are staying away. And uncertainty, my friends, is pure poison for the markets. And the reaction didn't take long. Look at this immediate drop in XRP. But not just that, the shockwave hit the entire ecosystem of tokens related to the ISO 20022 standard. Stellar, Cardano, Hedera, all down. This shows how interconnected everything is. Bad news for Ripple is bad news for many. The market is reacting with panic because a regulatory delay means less confidence, less liquidity, and more volatility. If you had any of these in your portfolio, you've definitely felt it. But despite the blow, Ripple isn't throwing in the towel. They remain firm in their defense. XRP is not a security. Why are they so insistent? Because their entire business model depends on it. If XRP were declared a security, it would be a logistical and regulatory nightmare. Its main value proposition for fast and cheap international payments would be destroyed. So this legal battle, even if it costs them millions and creates volatility, is crucial for their survival and growth. In a way, as long as the case remains open, they can continue to operate normally. It's a kind of tactical advantage amid the chaos. They maintain their market presence while weathering the legal storm. And now let's move on to the second major earthquake that's brewing. This one is much bigger and could affect the entire market, including Bitcoin. I'm talking about Tether. New stablecoin regulations are emerging in both the United States and Europe, and all analysis points to Tether being the big loser. Why? Because its structure and reserves have always been shrouded in opacity. The new laws will require total transparency, constant audits and licenses that at this moment Tether doesn't appear to meet. Imagine this scenario. The US and Europe say, either comply 100% with these new rules, or you can T-issue or circulate USDT in our markets. Boom! That would be a devastating blow to the liquidity of the entire crypto ecosystem. This opens a golden opportunity for stablecoins that are regulated and more transparent, like USDC from Circle, and even, ironically, for the future stablecoin that Ripple plans to launch. The market could completely and maybe you're thinking, okay, I don't use Tether, I only hold Bitcoin and Ethereum. Big mistake. It affects you a lot. Tether is the fuel that powers crypto trading. Most of the buying and selling volume of Bitcoin on exchanges happens with Tether. So if suddenly Tether's issuance is restricted or it loses public trust, what happens? Less liquidity, less trading volume, and that directly translates to less price stability for Bitcoin and potentially a sharp drop. The interconnection is total. A problem for Tether is indirectly a problem for Bitcoin. Okay, I know all this sounds very negative. Uncertainty, crashes, risks. But it's not all doom and gloom. There's a light of hope coming from outside the crypto world. The latest U.S. unemployment claims data has been better than expected. And why does that matter? Because it gives the Federal Reserve more confidence in the economy and a reason to lower interest rates. There's speculation about a potential rate cut in July. If that happens, it means cheaper money, more market liquidity, and a higher appetite for risk assets like crypto. A macroeconomic boost could counter some of the regulatory fear and help the market bounce back. So keep an eye on the Fed. Meanwhile, as all this unfolds at the top levels, on the user level, the community doesn't stop. In times of uncertainty, opportunities arise for those paying attention. For example, and this is something many of you have asked about, platforms like Bitbabo are taking advantage of this moment to attract new users. They're offering a €20 bonus completely free just for signing up. It's a smart way to encourage participation and let newcomers experiment without risking their own capital. In volatile times, starting with a little extra is always welcome. I'll leave the link below in the description in case anyone wants to check it out. And that's it for today. An intense but necessary recap so you know where we stand. The market is at a critical point. Thanks for sticking with me until the end. If you don't want to miss the next breaking news, make sure you're subscribed. See you in the next video.